Hey everyone, so firstly I'll quickly apologise about the audio and the screen. I'm away at the moment, so I've just not got everything with me, and even though I've tried to plug in all my mics and that, I just can't get it as good as I want. So this is going to have to do. The main thing is hopefully you'll get a lot of value from this recording. Right, so we're going to dive straight in, and I've actually chose this trade here that I want to go over. The reason for this is, one, I asked a lot of people what should I do, and two, I could see for myself it answers a lot of questions that people have been asking, i.e. the VWAP, this blue line here, the zones where it says ETM, and down here the 15-minute POI, the hourly, liquidity. It comes back to BE, which I want to explain. So it's got a lot there I can go over. So hopefully, running through this, I'm hoping you're gonna get a lot of value from this recording. So what I'm gonna do, I'm gonna start with the 4 hour. I do like to start from the 4 hour from time to time. Well, a lot of the time, to be honest. So as you can see from the 4 hour, overall it's bearish. But zoom in a little bit closer, you can see it broke. They have a big, strong four hour candle. Let's mark this up as we go. You can see it broke there with quite a big bullish candle. So I'd go as far to say there we're looking bullish on the 4 hour. So we're going to jump down to the 1 hour, which, as you can see, if you put it like that, on the 1 hour, we're day traders as well. You could quite simply just look at that line there. We're bullish. I know you're not just going to do one line to determine what your bias is, but you can see with your eye that we're bullish. So then, after that, well, what I've done with the 4 hour actually, sorry, just going back, is I did mark out this zone down here. It's quite low, but there is this imbalance here that it could come back and fill. Still could, really. And then it's got this order block down here. I kind of just took the whole zone there. I took that whole candle, took the whole zone, and I thought if it breaks through these areas that I've marked, comes down here, then I'll be looking for a reaction around here. So that's why I've got that one there. It's a bit extreme, but that's why I've got it. So we jump down onto the 1 hour. Now, on the 1 hour, you could see, I'm trying to slow down, I feel like I'm talking quite fast, that this candle here, this low, made a new high up here. So it's quite a big push. So it's quite an important area. Some call it a protected low, some call it a swing low, but here, some areas like this, when you mark up charts enough, they kind of just stand out. And this hourly order block here, I've marked out. Now, I didn't go to the top of that candle there because it just felt like that POI was really, really big. So I kind of just went to the body of the candle, but then, as you can see, it says 15 MPOI, that's my 15-minute POI. That's what I prefer to go down to, and a 5-minute. I just have the hourly marked out, and this answers the questions who wanted to speak about zones. These zones here, so if you see a reaction, when you're, let's just quickly jump down to the minute. If you see a reaction here, you know that's because that's jumped off the hourly order block. So you just know what it's reacting for. So that's why we mark out various different zones. Now, with this, I marked out the 15-minute POI because overall, I was looking for it to come back down. I want it to come down to this area here, ideally the 15-minute POI, and then take a buy. That's what my initial target was. That's what I wanted. But as it was creating, as the PA was making its candles and it was making its structure, what I could see here answers a good question that someone said they want to see more about liquidity. Now, I know we've spoke a lot about liquidity, but for anyone new here, breaking it down quickly, when you've got breaker structures here, you know there's a breaker structure because people are selling, there's going to be liquidity above it. Now, liquidity comes in all different shapes and sizes. So each time there's a new break, there's going to be more liquidity. So you can see down here, there's another, let's just mark this up big like that. There's another break there. I know there's little ones in between, but we're going to go with the obvious ones for now. You can see there's more liquidity. So you can see that building up. So not only is there liquidity from people when they enter, when it's breaking, there's also people who trend line trade. So you could go like that, That looks like it's probably a good trend line. So you could see where normally people start entering off the third tap of the trend line. So you'd go, whether you could count a couple there, you possibly have to count that one. So here, you know there's going to be more liquidity here. Let's get rid of that. You know there's going to be more liquidity here. So look, the liquidity is building up, but that isn't where I was aiming for liquidity to take. I was just showing you as a example. What I saw here, which goes on to the next thing someone wanted, which was imbalances. Now, as a few of you might know, the market likes to fill the imbalance. When there is a void in the market, that means it likes to come back and fill it back in. So as you can see here, there's a void there. The market likes to come back. Now, what I'm thinking here, there's an imbalance there on the 15-minute. I like looking at the 15-minute structure. 15-minute markup on the 5 minutes, kind of roughly how I do things. Then on here, on the 15-minute, you could see there was a break there. So for me, in my eyes, I could see with my eyes, there's going to be liquidity above there. Now, where it come back up and made like a equal high there, I know people with like break and retest and structure, they will enter on another short. So in my eyes, there was more liquidity there, especially when it started coming down here, because this ranged for a fair bit. Now, what you could say with ranging, if we go on to the 5 minute, you can see like there was littler breaks there. You could see, oh, there was that one there that I just took away. So you can see there's breaks there. You could see there's breaks there. You know what I mean? So there's, where it's ranging, doesn't mean no one's entering. People are still getting in. So where's most of them people going to put their stop loss? Where's most of them people going to put their liquidity? Above these, let's get rid of that imbalance box. They're going to put it above these equal highs. Now these equal highs are looking for the retail trader a bit juicy for liquidity above it. And again, I do like that as well. So how I'm starting to look at it, when it got to around, I think it was after this got made and it started coming in to this area here, I was thinking, okay, so if it comes above here and taps into that imbalance there, I'm ready for the buy. Hence why I did get it bang on the nose, because I put a limit there, it tapped it and it went away. So how I got this was, let's look at my confirmations. One, I wanted it to come down into this area here anyway. Look at the imbalance. I wanted the rest of this to fill. Lots of imbalance. I wanted the buy because we are bullish. So I wanted it to come down here. So as an intraday, as I wanted it to come down, I thought there is an opportunity to take a counter trend trade of what I wanted and then take the buy from here. So I had that, and I had my areas marked out where I wanted it to stop. This is where people go wrong. They have a counter trend trade and they just think, you know what, I'm just going to aim down to the graveyard. It's like, no, that's just stupid. That's just asking for it to come back up, go straight through your stop loss. So, oh, that's my alert. Let's go on that. Let's quickly check. I've got a gold trade there. Oh, lovely. That's the trade I've got going at the moment. Beautiful. As you can see, it's coming up to my VWAP. I'm going to take partials quickly and then get back to it. Let's quickly take partials on my phone. Beautiful. Trade's just going not too bad, look. Oh, it's going beautiful. Right, maybe I'll do a breakdown on this trade afterwards. Right, so where was we? So I was saying about people aiming to the grave. But this is why you mark out your zones, because you know this is where I wanted it, this is where the reactions can be. So I had that down there somewhere. So, sorry, I lost concentration a little bit there. So, we've got liquidity that can be taken. We've got our original bias, which was a buy, but because we want this area, we knew there's a good chance it's going to come down, fill this imbalance into this area. So we had that. I've got an EDM there, which is like a divergence, say. So if I show you on, I'm pretty sure it's more on the 5 minute. If you look from here, to here, and then you look from there to there, there's a divergence. And we spoke about divergence. There's a good confluence to show that it can react and go from there. Now, let's get rid of some of this because it's getting a little bit messy. Let's get rid of divergence. Let's get rid of that line there. Let's get rid of the trend line. Always keep your charts clean. Let's get rid of that. Now, what I've also got here, when I'm looking for this to come up here, you can see that we've got the VWAP there. Now, the VWAP is a volume weighted average price. So it's basically the average price of what's going on, and it's quite a good confluence. You get a lot of indicators that lag quite a bit, but this one's quite up to date. So basically, if you're looking for a sell, I'm kind of try to dumb this down a little bit because otherwise it just gets too confusing. If you're looking for a sell here and your candles are below this VWAP and it's going down, it's just a good confluence to say if it comes near this VWAP, it could react. So if this VWAP is in your POI and it's got your confluences, it's just good to go over. You can just rely on that as an extra confluence. Again, it works if you're trading above it. Look, where can I'll show you a quick example. If you're trading above it, let's have a quick look. No, look, there straight away. I mean, I know that's a candle news, but you just get the drift there, so I ain't got to go. If that's your area there that you're looking for it to come back down. The VWAP's there, it's come back down, it's shot up. So it's as simple as that. If you're bearish and it's there, then you can continue going down. If it's above it, it's going to continue going up. So it's a handy little tool to have there. It's called the volume weighted average price. So it's handy to have. So what have we got? We're coming down into buy. So we know our target's down here. We've got imbalances. So that's one confluence. We've got liquidity that it can come take and it can react from. So that's two confluences. We've got the divergence, which I showed you there, that I just marked up. So that's three confluences. We've got imbalance on the 15-minute. So that's four confluences. We've got the VWAP. So we've got five confluences. So you can see how we're building it up. So sometimes how I like to look at it, you can think if it comes to this area, at the very least, we're going to get a reaction. I'd be shocked if it goes straight through. Now, it does happen. It can go straight through. It's happened many, many times. But 9 times out of 10, well, I'd say my win rate is more around 80%. So 80% of the time, we're going to get a reaction. So that's what I was going off. And so I thought I wouldn't aim for the grave for the reasons I just spoke about. And I knew to take some partials out and bring it to BE when I got to this hourly POI. When it come down to there, I think I was out about 60% or something like that. And then, yeah, it come all the way back and hit me BE. But I got 60% of the trade. But I think this is a good trade to cover to show you if you're counter trend trading, don't aim for the bottom. It's just silly. If you're waiting for liquidity, wait for it to come up into your imbalance, get ready to take it, wait for your confluences, make sure you've got them all stacked up, and just be alert. So I wanted to go a bit more in depth with this, but I know the audio isn't going to be the greatest. I might even go back over this trade because it has a lot there going for it. So yeah, I hope this helps some people. Any little golden nuggets I know when you're trying to learn can really help. What other things was there that was going for this year? That was mainly it. Like I say, I wanted the buys. I did want the buys down here. That's what I was aiming for. Wanted this down here. I had this marked out. So say that below there, here, and then with the buys, when you're going with the trend, that is when you can think, okay, there's a lot of liquidity all along there. So that is when you can put it all the way up there. And whether you want to take out 50%, 75%, let the rest run because we are going back bullish, that is when you can do that. But just don't do it. If you're bullish and you're going against the trend, don't go down here. That is where so many people get bit. Just take your trade. Like, what did that work out for me? 2.5, not too bad. So if you go down to the bottom of here or go to the 15-minute where I would have been a 3-hour trade. So it's a good trade. So yeah, hope that helps. And after doing all this, I'm just hoping this is actually recorded and you can actually hear me. So anyway, everyone in Traders World, hope it helps. Hope you have a good week's trading. And yeah, when I get back to England, I'll get the recordings going a lot better, a lot clearer. And yeah, cool. Take care.